What is going on? Plenty going on, actually. So last week, just for context, seemed like the market did the minimally acceptable amount of rebound, kind of held its gains from late in the prior week. A lot of talk, though, about this idea that coming out of this period, maybe finally we get this rotation from big growth stocks into value strategy. So I do have a piece up on CNBC.com looking at this. And what's interesting is the message of the markets in this whole phase has been a turn toward more defensive stocks, less cyclical. Whether this is enduring or not is not clear, but I do think that the fact that housing and auto and all of these kind of domestic cyclical sectors have been at their lows, even retail has come in a lot, is causing people to question just exactly what is the market trying to tell us. And that's the context where it's tough for the value trade to actually come back unless we get some clarity that for this end of cycle fear is not actually imminent. So look at the chart of this is basically the S&P 500 growth index against the S&P 500 pure value index. Pure value is statistically, these are the cheapest stocks in the S&P 500. It's about a 35 percentage point performance spread over 5 years. So this has caused a lot of people to say, finally, maybe it's just due to have a little bit of a value resurgence. What does it mean, though? What would it mean for these types of value stocks to work? You're buying kind of the disrupted companies. So in addition to them being cyclical and maybe levered and maybe vulnerable to higher rates, they're also old media, the entire auto supply chain. You own it if you own this index. You own all of chain mall retail.
Retail, yeah.
And you own like 25% of it is financials, including the entire insurance industry. So what do you mean by value? I think what people mean is quality. I think people mean stability, and quality might be the thing to do here.
And not necessarily just the cheapest
Look
stocks.
at today, right? We're going to bounce maybe in the morning in the U.S. because we got this big China bounce. NASDAQ's up twice the percentage of the S&P right now, right? So it seems to me if we just get kind of a fourth quarter rally, it would be really weird if the big growth names that had gotten us here don't really participate in a full way. So that's why it's a little bit noisy to figure out that value is going to carry us from here.
All right, let's